Hey everybody, this is Sam the Money Geek with your what's going on in the stock markets for Thursday, March 12th, 2026. Thought I'd try something new instead of writing it up, and I'm going to do and try to get this in 5 minutes or less to talk about what's happening with the markets. You're looking at some of the data for the day for the last 5 days, the month, and year to date, and obviously not a great day in the market. It hasn't been a too bad for the last 5 days. We've had a little bit of red, but on a year-to-date basis, we're still, for the most part, flat. We've gone nowhere with the war in Iran and what's happening all around in the economy. We got a not so great jobs report last Friday where 92,000 jobs were reported lost for the month of February. And so there's some concerns about the economy, concerns that we're not lowering interest rates and what have you. So a little bit of geopolitical risk and the price of oil, obviously, if you're filling up your gas tank, you know where that's going. So a bit of effect on the market today was a reaction. What we're seeing right now is the market's kind of trading inverse with crude. Crude goes up, the markets go down, and it's almost like the Gulf War, where every little bomb that would go off, every bit of news would kind of get the market shooting one way or another. But we've got to put it in perspective. On a year-to-date basis, we're just basically flat. And if you're in the mid caps or the small caps or the micro caps, we are up on the year so far. And you can look, if we divide the S&P 500 into its 11 sectors, there are more sectors up than are down. Technology is obviously taking up a little bit, but if you're in energy stocks, you're doing pretty well. And so it's a mixed bag here. And if we just look at around the world, you can see that if you're in overseas markets, they're doing not too badly year to date. So we have to always zoom out, and you can see here the 1 year and 3 year record for these various subclasses of investments. You look at different countries and see how they're doing year to date. It's a mixed bag, no question about it. Who doesn't want to be in Brazil this year? Up 18%. Bonds are not really going anywhere. They're not up. They're pretty much flat, which means when bonds are down, it means that the yields are going up, and we can already see that in interest rates. But we did see 30-year mortgage rates dip below 6% recently, so that's a good sign for the housing market. What you want to be into is commodities, be it gold or silver. Oil up 58% on the year. Last December, we were trading as low as $55 a barrel, and today we're around 96, 97. And overnight on Sunday, with the geopolitical news, we saw oil hit $120 in the futures market, but that was quickly given back. And what we're also seeing is kind of a reversal of what we saw last year, is the dollar now gaining strength on other currencies. And quite honestly, a strong dollar usually means a little bit weaker equity market. The status here is that the market is getting oversold. I would expect a bounce in the next day or two. There is a Federal Open Market Committee meeting coming up on Wednesday, so they're going to make a determination on an interest rate cut or not. 99% that they're not going to cut rates, at least not until we get a new Fed chairman coming in May. I guess my video is switching off for whatever reason. But for the most part, I think we're closer to the end of this decline than the start of it. And if you look at the year-to-date performance, it hasn't done that bad so far. And it's kind of, call it a flesh wound. And what I like to do is to take you and zoom out a little bit to a chart and bring this to you. Let's see if I can get this on the screen for you and find out why it's not showing up. Here we go. This is a chart of the S&P 500. that you're seeing. And every candle here is a monthly representation. Every green candle is an up month, and every red candle is a down month. And so you can see since April of last year when it had a little dip, we've been up, 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 and now we are pulling back a little bit. So in the whole scheme of things, you just zoom out and you can see that this is a steady uptrend, and we're always going to get little corrections along the way. And this does not have me concerned at all. But for the most part, with our clients, we have hedges in place, inverse funds. We're using options to hedge the portfolios, and we have taken profits on a lot of positions. And I'm in the process of looking for stuff to buy on this pullback. But this is a midterm election year, and therefore we're going to see volatility, more volatility, ups and downs, at least until election results are out. And of course, with geopolitical news, it could sway the market either way. But all you have to do is zoom out to this market, and you can see that we're going from the lower left to the upper right, and these little pullbacks are almost like a blip on a long-term calendar. In any case, thanks for tuning in. I'll try to do these more regularly, and give me your feedback. Put some comments and let me know if you like this format, and I'll do it more often. I did run over my 5-minute allotment, so thanks for watching, and I will see you next time. Take care. Bye-bye.